So hi, I'm Mark McAllister, Senior Partner for Holborn Assets based in Cape Town in South Africa. Yeah, so Fintech is pivotally important to our business. It's really at the core of our strategy. We're very digitally focused. So the main parts of that as far as clients will see is that we have the latest up-to-the-minute connection through Holborn Exchange, which is our online platform for clients. But our advisors internally have the latest generation of technology from their side of the business as well. It's called Advisor Connect. It really is a fantastic bit of kit that threads together everything that you want to need to do as an advisor. And then on top of that, our lead generation, which we do a lot of, is very, very digitally focused. So huge amount of fintech now running through the whole business.
I think Bob mentioned digitize or die in an interview with you a few years ago. And we've invested heavily in new systems and processes in order to meet that change and that challenge. But when people used to talk about fintech, especially in our space, it always used to be coupled with the threat of robo-advice to the traditional IFA. Will it replace the advisor? And now the discussion is more about the integration of technology to complement the proposition, be it greater efficiency, instant access to information, cost reduction through automation, and so on and so forth. But I don't think that's now considered a benefit to a client. I think that's simply expected. That's now the bare minimum. Today's client has different demands and expectations to what it did 5 years ago, and that will be different in the next 5 years. And that's the result of exponential growth in IT. So companies such as ours have to keep up. And also looking forward, the younger generations are tomorrow's clients, and they will require a different kind of service, a different form of advice and interaction, and almost certainly a different and more conscientious approach to investment. And if we cannot provide that, if anyone for that matter fails to provide that, then I think both clients and advisors will look to someone who can. So it's critical. I think we have to stay ahead, but I don't think it's a choice anymore. I think it's a necessity.
Interesting question, right? It's been around for over a decade if we use Bitcoin as the standard. So we have to come up with a way of explaining what this thing is, right? And there's two economic theories really that can explain it. So the first one is greater fool theory. So it's the bubble theory, the South Sea China shipping company, tulip mania, whatever you call it. It could be something that is being overpriced, it's in bubble territory. But the problem is when you look at it from a charting perspective, it's been through several big, price moves upwards. And so, if you actually also extrapolate it into the trading time frames as if it was a stock market, it's effectively been around almost 60 odd years. So actually, if it's a bubble, then it's one of the most unprecedented bubbles from a time duration perspective. So a lot of people now starting to say, well, if it's not a bubble, what else is it? What else explains why the price is doing what it's doing? And the only other theory that holds water is network theory, network adoption theory. So we've all got phones on our desk, maybe in our hand right now. And I think that the only other example more recently that's also very, very relevant is Facebook. So there's an idea that Mark Zuckerberg sketched on a bit of paper and a laptop in Harvard. And then by the time it got to IPO, it's worth over $100 billion. And now, despite that it's dropped today, it's risen to an absolute behemoth in the world as Meta. What explains that price action really would be the number of users. In fact, that's the reason they've sold off a little bit, is down to the reduction in their monthly users, apparently. So the network has a value. So if you believe that what we're seeing as network adoption theory in crypto, then with something that has a fixed supply, then inevitably the price will continue to rise.
How long have you got, Gary? I think we're going to have to split this one up into a few different segments. Okay, so regarding advisors, it's simple. It's down to education. I see and hear people write this off all the time with little actual knowledge, which I find surprising. I think you always have to be skeptical of your own opinions, and you need to be open to change. So I think each and every advisor should be putting in the time and the effort to learn about this space. In fact, I would go a step further and I would say it's their obligation, it's their responsibility to educate themselves on this. Personally, I think technology is a one-way street. I think, save some world event, we're never going to live in a less digital age than we are today. So it's only going one way, and I think with any new asset, volatility is to be expected. And people will always be skeptical and have their doubts. You just look back through history and you can see evidence of that. In the early 90s, they were auctioning off bandwidth, which people thought was crazy. Everyone thought early adopters of the internet and emails were crazy. And you can go right back to the birth of the stock market and the issuance of shares. And that was banned in the UK for over a decade because the government deemed it too risky. But we live in a digital age and we already use digital money. So I think any argument around that is completely redundant. I think the question is, does blockchain improve on the functions we have today in the present monetary and banking system? And that to me is a resounding yes. I think it makes it look archaic. So I think it's a question of when and not if. And I think the adoption numbers prove that. Just ask any millennial if they would rather hold Bitcoin or gold, and then remember that one day they are going to be the ones making the policy. Professionally, however, and speaking as Holborn, it's a much bigger challenge. Governments, banks, regulators still need to catch up. And that means that credible partners are still in short supply, because Holborn is certainly not going to be custodying assets. So until then, we wait. We stick to plan A, which is holistic advice. And when it comes to crypto, we'll provide education to our clients, and we will continue to do so until such time we feel we're in a position to facilitate, to advise and execute on those investments. But the day will come. The pressure is there, the demand is already there, so it's only a matter of time.
I think we're past the point of just saying, don't touch it. I think we're past the point of just saying, don't put money in that you can't afford to lose. And why I say that is the amount of scams that have managed to claim victims. South Africa, as an example, suffered hugely to a scam called Mirror Trading International. There was another one called AfriCrypt. And in both examples, they managed to catch the market and get a foothold because of a lack of regulation, a lack of knowledge, and a lack of a point of view from financial advisors. So when there is no stance on crypto, then these kind of things can happen. They're dangerous, right? They are dangerous. It doesn't matter whether it was binary FX trading. Before that, it was carbon credits, and it goes all the way back to when Charles Ponzi created the Ponzi scheme. So it's very important that we as financial advisors have a view on it, and that we're able to guide clients on it. Because with all markets, there's an element of fear and greed, and unfortunately, a typical retail investor will pile into a market at the period of maximum financial risk, when the FOMO kicks in and the fear of missing out, and then unfortunately, when the price inevitably corrects, and the fear runs through a marketplace, the period of maximum financial opportunity, they normally miss that. So again, that's where financial advisors like us need to understand where it is cyclically. We need to be able to explain what it is, what it does, and what the risks are with crypto. So firstly, I can't divulge what we're working on, but there are things in the pipeline. I'd say we're a very dynamic and innovative business, so we're always looking for the latest opportunities that we can present for clients if there's a need there. So watch this space. We have clients that have crypto already. They've bought it on an exchange, which is great. But the first point is if it's not your keys, it's not your coins. So maybe there's a bit of guidance there about how do you secure crypto using hard wallets, that sort of thing. So again, there's an educational requirement there. And then we've got clients that just want exposure to the price action. So potentially that might be through some of the existing market options. There's exchange traded products everywhere from Switzerland to Sweden. One of the longest established investment trusts in 2013 is in America. And inevitably, we will see, I feel, the American market approving, the SEC will approve a Bitcoin spot ETF at some point, not just a futures one. And then that will allow institutional investment as well. So through a number of those means, but also if clients are looking for specific advice around crypto exposed stocks and shares, like of MicroStrategy, Bitfarms and a few others, then potentially we can show them which funds that are on our whitelist have access to those specific asset classes. It's a great question. So look, there's really is a sort of a dichotomy in the industry, right? There's a lot of you're seeing the robo advice really starting to come through, or the robo platforms, the likes of a Robinhood, Hargreaves Lansdown in the UK. So that has a place in the market, but still there is that need for a hand on the tiller, for somebody that you can trust that provides good, solid advice on a wide depth of areas. And that's where a solid, well-qualified financial advisor comes in, and that's what Holborn's all about. So from a fintech perspective, all of our clients have up to the minute access through Holborn Exchange. Our advisors have up to the minute latest platform through Advisor Connect. It really is next generation. So if there's advisors listening to this that are still struggling with bits of paper and don't know what digital signing is and haven't ever taken a new client on via Zoom, then you need to have a discussion with us, and we'll show you how to do business in the new world. And as far as the service levels, we are absolutely committed to our strategy around quarterly reviews. And even though that might be on Zoom, or it might be face to face, we still feel there's a huge place in the marketplace for that level of trusted financial advice.